you're thinking about buying a short-term rental, not sure how to finance it, wondering what the options are, what might be best for you, watch this video. I want to talk to you about it through the eyes of a lender and a short-term rental investor today here, Ray, Mortgage Master Group in Denver. First of all, I'll just share with you that I've owned short-term rentals for over a decade. It is an asset class that can grow your wealth. Getting financing, though, can cause a lot of confusion for people about how to go about it. What is the best way? So let's kind of dive into different loan options that you may want to look at. First of all, I'm going to dispel a myth, and that myth is you can't use second home financing for this type of property. You actually can. In fact, it's even possible to have your rental income on your tax return and refinance a second home. You just won't get that income as qualifying incomes. As it relates to second homes, something to be aware of. If you're financing them, sure, it's great. 10% down, that could be an awesome option for you. Keep in mind though, with some changes to what are called low-level pricing adjustments, you might actually see an interest rate higher on a second home than investment property. Now, I know that sounds weird, but as a broker, we're looking around at all different investors, and there is something to be aware of, which is that Fannie Mae and Freddie Mac created a limitation on how many loans they wanted servicers to hold for second homes and investment properties. So when talking to a lender to decide who you're going to work with, not a shameless plug, but you may want to look for a broker because we're going to have access to a multitude of lenders. If you go to your bank, they may not offer the loan terms that are aggressive enough to make these numbers pencil for you. Okay, so something else to be aware of. Yes, you can do 10% down, but you're going to pay for it in interest rate. So if you do 20% down, maybe you look at it as an investment property. Talk to the loan officer about the ability to compare rates for a second home versus an investment property. Something to think about. If it's tight for you for qualifying on your debt ratios, second home, you're going to qualify for that mortgage and your mortgage plus your other debts, etc. Investment property, they're going to take 75% of projected rent shown by an appraiser on that property to qualify you and offset the mortgage payment of the house you're going to buy. So sometimes these idiosyncrasies can make all the difference in the world in qualifying, because if you're getting into terms, those will have the best terms. Now, some people will look at what's known as DSCR, debt servicing coverage ratio mortgage. Simple. They're not going to get into your employment. They're not going to get into all the other things that would on that loan I just talked about for second homes or investment properties. However, these loans commonly have a prepayment penalty. You can get a DSCR loan without. You'll pay for it in interest rate, but talk to the loan officer because it still may make sense for you, but anticipate a larger down payment will yield a lower interest rate. So be prepared to do that if you look at a short-term rental. However, then the challenge becomes, what is the cost of the area you're buying in versus what the mortgage payment will be, because debt servicing is all about that. What is the rent versus the debt, and what's the ratio? There are options where it's called no ratio, where it doesn't matter how much the rent is versus the mortgage payment. Again, the important thing about DSCR loans, that prepayment penalty. They can offer interest-only options, so this could be great for you in terms of when you're looking to buy a property. If you can't qualify, you're not looking to qualify traditionally, the DSCR loan can be great for you for short-term rentals. But now I'm going to touch on something that is, in my opinion, really cool because of the fact that one of the shortcomings of getting financing in a non-traditional space for short-term rentals is that the rent an appraiser says for long-term rent is never going to match that of a short-term rental. So how do you go about this? How do you qualify with the projected short-term rental income? There's actually loan programs out there where you can use the income based off a revenue analyzer from the likes of, say, AirDNA, and they will take that income. Now, it gets a little bit muddy here, but I'm going to share this with you. Depending on the loan program, depending on the investor, they may or may not take a haircut on that revenue that's showing for projected rent on the short-term rental income. It may or may not matter what's called the market score. You would find this on AirDNA. It may or may not matter what shows for the occupancy percentage shown on AirDNA. I'm going to do another video here soon about AirDNA and why You shouldn't really trust the information if you're underwriting a property to buy it as a short-term rental. As someone who owns them and is a lender, I'll break down why it's misleading and not to be trusted when you're making that decision to buy a short-term rental. It can lead you to avoid a great property, and it could trap you into thinking the property is going to be great when it's actually not. So what did we talk about? We talked about traditional options. So expect, 10% down on a second home financing, 20% down. Now these are with respect to single family homes. Could vary. You go 2 to 4 unit, etc. Talk to the loan officer. Then I talked about DSCR and one that's really cool, which is short-term rental financing specifically for DSCR. Just going to go off the projected short-term rental income against the payment, and there's no haircuts, there's no requirements for all the things I talked about. Make sure to check out other videos, subscribe for more tips on building wealth through real estate. If you want to have a consultation, as I said, I've owned short-term rentals for over a decade, calendly.com/mortgage maestro, and subscribe for more authentic wealth building tips about real estate. Thanks so much.